Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 324 on May the 24th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on ChargePoint Holdings, the Proshares Bloomberg Natural Gas ETF, and Robinhood Markets, and we discuss three new trades on Iris Energy, CleanSpark Inc, and Chewy Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the two major stock indexes had mixed results this week. The Dow Jones Industrial Average lost 934 points, closing at 39,069 points. The S&P 500 index gained 1 point, ending the week at 5,304 points. And this is quite an interesting outcome for these two indexes because there is really one company that truly outshined the rest, and that company is largely in the S&P 500. So when you're trading these indexes, or maybe you have your 401ks or just some ETFs, that are invested in these indexes, it's always important to know what the components are so that you know what you're actually trading in, right? These indexes are compilations of large companies, not just standalone indexes. Like, they are made up of something. So this was an interesting week. And if you're wondering which company, that means you're probably under a rock and haven't paid attention, but this is definitely NVIDIA had a lot to do with this. All right, so now it's time for the topic of the week. The topic of this week is summertime. This is Memorial Day weekend in the United States, which marks the beginning of summertime. Summertime in the market isn't just about pools and suntans. There typically is lower volume because many of the big pension funds and mutual fund managers, even some of the hedge fund managers, will be in summer mode. Some of the largest volume in the market that comes from these groups. And they tend to not put on large positions while they are vacationing in Europe or sailing around the Cape in Boston. Lower volumes can often mean less volatility. It doesn't always happen immediately after Memorial Day, but it certainly is something to be aware of. If your trading style requires large movements in the market, you may be out of luck for the next few months. Historically, you get lower volume and typically lower volatility from Memorial Day to Labor Day. Now, we are at all-time highs in the market as well, so maybe this year will be a little different, but I'm still going to keep my eyes open. I look at the summertime like an athlete looks at off-season. It's the best time to retool and polish up on your skills. After Labor Day happens in September, we're only 1 month away from entering the fourth quarter of the year. To finish the year strong, you have to be ready. The time to get ready is now. It's this summer. And I have a special announcement for anyone that wants to get better with option trading this summer. So as many of you know, I learned to trade options at one of the largest options exchanges in the world, the CBOE. I had a built-in system of mentors and coaches. I had a structured process to go through that consisted of learning in the classroom and observing in the markets daily. We had homework and quizzes and tests. There was an entire structured program to make sure that I learned options before I started trading options. The challenge with learning to trade options from home is that you don't have that same structure. You also don't have anyone that you can ask questions to when you get stuck. And it's typically not even the hard topics that stump you. It's something simple like how to use break-even points to manage where you buy and sell options. I've had several students at this point come through my option trading class, so I've gotten better at my strategy. I already have the 6-module video course. I'm adding homework so that everyone learns. I'm adding a cohort so that you can learn in community with others. You will no longer be alone trading because you'll have a group of students that are learning with you. You might have questions that you don't want to ask the teacher, so having a peer group to connect with is very important. You will also be able to use the Discord channel to stay connected, and you'll have access to that advanced technical analysis course I recently recorded. This is a 3-month program, and I'm limiting it right now to a maximum of 10 people. The price is super affordable too. It's only going to be $500 per month for 3 months. You'll pay monthly, so it's not even a big chunk up front. We will make small trades throughout the course of the 3 months, so you need to have at least $2,000 for trading in an account where you are able to trade options. If this sounds like you and you're tired of trying to learn how to trade by yourself and wondering if you're making any progress at all, then it's time to get some coaching. Summertime is the best time to do it. Visit the website and click on the banner that mentions the Memorial Day special, or go directly to the page at theweeklyoption.com/Memorial Day. I'm only allowing 10 people to sign up for this program, so don't wait. Sign up today while there's still a spot with your name on it. That's it for the topic of the week and the special announcement. Let's go ahead and get into the review of last week's trades. We'll start off with the covered call on ChargePoint Holdings, symbol C as in Charlie, H as in Hotel, P as in Papa, T as in Tango. At the time, the stock was trading for $1.91 per share. I looked at buying stock and selling the June 2 call at 21 cents, hoping for a return of 15.71% in 5 weeks. Well, shares of ChargePoint lost 13 cents, ending the week at $1.78 per share. The call option that we sold lost 6 cents, leaving us with a net loss of 7 cents if we were to close the trade out immediately. Now, with 4 weeks left until expiration, the stock price is still above the break-even point, which means we are actually making trade money on this trade. So no adjustments are needed so far. I still love that this stock is so underpriced. I'd be fine with holding the stock beyond expiration in order to keep selling additional call options against it in the future months just to run up my actual return. So this trade lost money on the week, but don't worry, the overall trade is still looking very positive, and so no adjustments are needed at this point. You just need to make sure that you follow along with the stock price until expiration. Don't ever think that the covered call is a low-risk trade. It's not because of the stock price, but because I'm on the show mostly using penny stocks, stocks that are worth less than $5 per share, that keeps the actual loss pretty low, and that lowers the risk. You always have to consider not just the percentage that you could lose, but the real dollars that you can lose when you're putting trades like this on. All right, so let's get into the credit spread from last week. We looked at the Proshares Trust 2 Ultra Bloomberg Natural Gas ETF, symbol B as in Bravo, O as in Oscar, I as in India, L as in Lima. At the time, the stock was trading for $19.49 per share. I looked at selling the June 18-17 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread. Well, shares of the Boyle ETF lost 44 cents, ending the week at $19.05 per share. The out-of-the-money put spread that we sold is still out of the money, even though the spread has gained some value. So as long as the share price of the ETF expires above $18 per share, we will keep the full amount of money that we collected when we sold the spread. So even though the spread has gained a little bit of value with the price drop, the spread is still more than $1 out of the money, which is why I chose those strikes. And the stock price is roughly $1.40 above our break-even price. So these are all positives. This trade is definitely still making money, so no adjustments are needed at this point on this one as well. Our final trade from last week was that debit spread on Robinhood Markets, symbol H as in Hotel, O as in Oscar, O as in Oscar, D as in Delta. At the time, the stock was trading for $20.08 per share. I looked at buying the June 19-20 call spread for 60 cents, which could give us a maximum gain of 40 cents per spread, or that's a 66.67% return in 5 weeks. Well, shares of Robinhood rose 43 cents, ending the week at $20.51 per share. The in-the-money call spread that we bought is now even more in the money. That means the trade is working out as planned. That always makes me smile big, even though you can't see it. I'm smiling huge right now. Now, no adjustments are needed on this trade. You'll obviously need to manage the trade over the next 4 weeks because it's still open and the stock can move, but so far, so good. So that's it for the review of last week's trades. And I love this show so much because I get to not only talk about the review of the last week's trades, but then I get to dive into the upcoming trades. I love sharing the new trades. It's just fun. And I love it when you guys email me. So keep sending the emails, keep asking questions. It's so much fun for me. So let's get into this upcoming week's trades. And of course, all trades on today's show will use the June 21st expiration for monthly options in the month of June. So we're going to start off with our covered call on Iris Energy, symbol I as in India, R as in Romeo, E as in Echo, N as in November. The stock ended the week at $7.83 per share. I'm looking at buying stock and selling the June 8 call at 70 cents, hoping for a return of 11.11% in 4 weeks. Now you enter this trade by buying stock for $7.83 per share and selling the June 8 call at 70 cents. This trade makes the most money if stock prices finish above $8 per share. The break-even price on this trade is $7.13 per share. And in real terms, the stock purchase will require $783 and you'll collect $70 for selling the option. Next up, we have the credit spread on CleanSpark Inc, symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. The stock ended the week at $17.63 per share. I'm looking at selling the June 17 put spread at 20 cents. That could give us a maximum possible loss of 30 cents per spread. Now you enter this trade by selling the June 17 half put at $1.85 and concurrently buying the June 17 put for $1.65. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $17.50 per share. Our break-even price is $17.30 per share, and in real terms, you'll receive $20 per spread that you sell and have $30 at risk. And our final trade on the week is going to be a debit spread on Chewy Inc. Symbol C as in Charlie, H as in Hotel, W as in Whiskey, Y as in Yankee. Now the stock ended the week at $16.60 per share. I'm looking at buying the June 16 half call spread for 27 cents, which could give us a maximum gain of 23 cents, or that's an 85.19% return in 4 weeks. It's a huge return on capital. Now you enter this trade by buying the June 16 call for $1.89 and concurrently selling the June 16 half call at $1.62. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $16.50 per share. The break-even price on this trade is $16.27 per share, and in real terms, you'll pay $27 to enter this spread, and your maximum gain is $23 per spread. So that's it for this week's show. Thank you guys for listening all the way to the end. Definitely wanted to point out, with this being Memorial Day, the markets will be closed on Monday, May the 27th. So expect a shorter trading week next week with markets opening on Tuesday morning, May the 28th. So have a happy Memorial Day if you're celebrating here in the United States. If you're not in the United States, enjoy your trading day on Monday just the same. I kind of get annoyed when we aren't able to trade. I like to trade. If you have any questions about the coaching program that I'm offering this summer, definitely shoot me an email at eric@theweeklyoption.com. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.